crazy, we're nothing more than friends. You're not my lover, more like a brother. I know you since we were like 10. Yeah, don't mess it up, talking that shit. Only gonna push me away, that's it. When you say you love me, that made me crazy. Here we go again. Don't go look at me with that look in your eye. You really ain't going nowhere without a fight. You can't be reasoned with them, don't be impolite. Haven't I made it obvious? Haven't I made it clear? Want me to spell it out for you? F-R-I-N-D-S. Haven't I made it obvious? Haven't I made it clear? Want me to spell it out for you? F-R-I-N-D-S. F-R-I-N-D-S. Have you got no shame? You looking insane, turning up at my door. It's 2 in the morning, the rain is pouring. Haven't we been here before? Don't mess it up, talking that shit. Only gonna push me away, that's it. Have you got no shame? You looking insane. Here we go again. So don't go look at me with that look in your eye. You really ain't going nowhere without a fight. You can't be reasoned with them, don't be impolite. I've told you 1, 2, 3, 4, 5, 6,000 times. Haven't I made it obvious? Haven't I made it clear? Want me to spell it out for you? F-R-I-N-D-S. Haven't I made it obvious? Haven't I made it clear? Want me to spell it out for you? F-R-I-N-D-S. F-R-I-N-D-S. F-R-I-E-N-D-S. That's how you spell friends. F-R-I-E-N-D-S. Get that shit inside your head. No, no, yeah, F-R-I-E-N-D-S. We're just friends. So don't go look at me with that look in your eye. You really ain't going nowhere without a fight. You can't be reasoned with them, don't be impolite. I've told you 1, 2, 3, 4, 5, 6,000 times. Haven't I made it obvious? Haven't I made it clear? Want me to spell it out for you? F-R-I-N-D-S. Haven't I made it obvious? Haven't I made it clear? Want me to spell it out for you? F-R-I-N-D-S. F-R-I-N-D-S.
Lately, I've been thinking, I want you to be happier. I want you to be happier. When the morning comes and we see what we've become, in the cold light of day, we're a flame in the wind, not the fire that we begun. Every argument, every word we can't take back, 'cause with all that has happened, I think that we both know the way that the story ends. Then only for a minute, I want to change my mind, 'cause this just don't feel right to me. I wanna raise your spirits, I want to see you smile, but no, that means I'll have to leave. No, that means I'll have to leave. Lately, I've been thinking, I want you to be happier. I want you to be happier. When the evening falls and I'm left there with my thoughts, and the image of you being with someone else, well, it's eating me up inside. But we ran our course, we pretended we're okay. Now if we jump together, at least we can swim far away from the wreck we made. Then only for a minute, I want to change my mind, 'cause this just don't feel right to me. I wanna raise your spirits, I want to see you smile. No, that means I'll have to leave. No, that means I'll have to leave. Lately, I've been thinking, I want you to be happier. I want you to be happier. So I'll go. I will go. So I'll go. I will go. Lately, I've been thinking, I want you to be happier. I want you to be happier. Even though I might not like this, I think that you'll be happier. I want you to be happier. Then only for a minute, I want to change my mind, 'cause this just don't feel right to me. I wanna raise your spirits, I want to see you smile. No, that means I'll have to leave. No, that means I'll have to leave. Lately, I've been thinking, I want you to be happier. I want you to be happier. So I'll go. I will go.
Hello. Good evening, Sci Nation. Testing 1 2 3. Testing 1 2 3. Let me know if you can hear me. Hello. Somebody in chat, let me know. Can you hear me? Testing 1 2 3. Want to make sure the microphone's on before we start. All right. Thank you, Rasco. Thank you. Cool. All right. Let's see. Just start and see who we hear in here first. Let's see. Sorry, give me 1 second, guys. All right. So, hey, what's up, life? Hey, CJ. Hey, Motivic, Geo, The Bull, VC, LBE, Jenny, Rasco, Tasman, Himza, Cooties, JD, Mo. Welcome, everybody. First and foremost, thank you all for joining this live space. So I want to give you guys a pat on yourself on the back for joining on. It's Saturday night, and people got things that they rather do than sit here and look at charts and whatnot. So I picked this purposely this time. It's a way to prevent you all from being on the streets, doing bad things, doing wrong things in your life. We're just going to look at charts and try and make money. Right now, I'm just kidding. I'm fucking with you guys. You do what you want with your life. But anyway, man, this keeps you off the street and keeps the alcohol away and the angel dust on the side. Good stuff, man. Anyway, all joking aside, let's really just get into it. I actually did pick this time just because, look, for us in the U.S. in the New York time, it's 7 o'clock. For you in California, it's about 4 p.m. For you guys and girls in Asia, it is 8 a.m. for you, so it's not too bright and early. And unfortunately, I'm sorry, Europe. I know this is probably like 1 or 2 a.m. for you. Somebody's got to win, somebody's got to lose. Just how the market works, right? All right, let's just start. Look, if you have more than one monitor, I would highly suggest you load up your screen with whatever trading platform charting platform you use, and start marking off the charts, right? Because we are literally going to do a live charting analysis for Monday, right? And those that are here tonight, you will get the benefit. I'm not sure if I'm gonna put this up on YouTube, meaning that once we record it, I'm not gonna upload it. Well, we'll do the usual. We'll have you guys work for it, so you all get the benefit of it versus everybody else, and we'll go in deep dive into it and whatnot. Again, it's not financial advice. This is to show you how I chart and how I look at it. It is not the only way nor the best way. It is just the sad way. So I never claim to be the best or know it all, and I'm not gonna claim that this is the most effective way. Right? Everything's subjective. People have their own opinions and whatnot, and their own personal trading styles. We will touch upon my trading style, which uses the EMA clouds, which you see right here. This green little color gradient. We will also use the strat, which is the 1, 2, 3 candles that we always talk about. We will use elements of traditional technical analysis, right? Support, resistance, supply, demand, patterns, trend lines, and we will also incorporate elements of ICT, right? Not full ICT, but we will incorporate elements, right? That's nothing new. I've been actually talking about fair value gaps for almost 2 years now, right? So that's why if you look on my profile, it's called I'm a hybrid trader. I don't trade one particular style. And some may say that I use too many things. But you know what? It works for me. And I know that some of those of you that have adopted my particular style have found great success and consistency with it. But anyway, let's just start. So every time I look at the charts, I always do a top-down analysis, right? So I go from a larger time frame, or HTF, right? That's the most popular acronym people like to use. HTF, higher time frame, right? So I start on a higher time frame or a bigger time frame, right? I start the monthly. So what I like to do, and we're just gonna go slow. I know, and look, now if you're already on this and you know how to do this, just bear with it, right? A lot of people here are new to this, and we all start somewhere. So let's just be patient for our brothers and sisters in this battle against the market, right? So what I like to do is go from the monthly, and I will mark off the high and low, right? So let's just do that. And then whether you label it how you want is up to you, right? So I like to label it with, the actual price point so that I know when we get there, it's a more of a visual psychological thing as opposed to just putting, daily high, right? For me, I like to see the number and then I just put the high, right? And we're going to do that with the low as well. Or sorry, this is a monthly. I apologize, monthly. And we will talk about why this is important in a minute. Let's just label it out. Goodness, man, can't even spell right now. Gotta lay off the whiskey. And then we will find the 50%, right? So use this. So what I did, I took the Fibonacci charts, did the high, low, high. It doesn't really matter because the 50% is the middle, right? I'm not worried about the 786, 610, 2538, and whatever extent is, right? For me, I only use the fibs really for the 50% mark. That is what I use it primarily for. A lot of you will trade it otherwise, which is fine, right? So once we get the monthly, we will drill down next to the weekly. And last week sucked ass because it was Thanksgiving week, or this week I should say. So there was no real range in terms of the price. And you can see that the weekly and monthly high are the same. So we will label that as well. And that will change as we go into next week, right? So you guys and girls, like I said, as I do this, start doing on your chart. And we will talk about it in a minute. Like once we label it out, we'll talk about why we do that. So this is literally what I do. Every single night it changes, right? The thing that changes is obviously the monthly won't change until, we hit December, and the weekly won't change until we hit next, Sunday night. We'll change it. Then we did the daily, or we did the monthly, we did the weekly. So we're drilling down now, right? Top down. Now we go to the daily. And if you guys use trading views, you can actually create little templates, right? So I can do this, and you can see I have day high, day low, 50 weekly and whatever. But I don't use it as much just because I like to have the numbers in there, so it's actually faster for me to do it this way. And there are indicators that you can get out there with TradingView. I'm pretty sure with the other platform, which is TrendSpider, that you can have the daily high, low, maybe even 50% in the weeklies and whatnot. And I think you probably do the monthlies. If not, man, that's probably something that I will maybe pay somebody to code and script out for me, because it does get a little bit cumbersome every single time we have to do this. All right. Now we have our monthly, weekly, daily highs, lows, and 50%, right? All right. Let me know. Type a 1 in the chat if you are following and if you're at this step, right? Literally, this is live charting, right? Live charting. This enables you all to mark off your chart. So hit me up with 1 in the chat so I know that you are ready to go. We're really literally just, I'm gonna show you how I chart, and this will just be like a part of an insight on how we analyze the dot here. So hit a 1 in the chat for me. Let me know if you're following. All right, thanks, Jenny. Yep. No worries, Gio. That is why I asked for the 1, right? Because I know, I'm used to this. I know it takes time for you all to sift through your charting platform and the different time frames and whatnot. I'm literally going to show you, right? A lot of you always ask me, what's a good video to look at charting and some technical analysis. This is it, right? I'm literally going to spend the next hour showing you how to do this. And again, if you're a veteran at this and you understand it, great. Look, it doesn't hurt to get a refresher. All right. At this point, look, I'm going to assume most of you are pretty much at this, right? You're pretty much at this step. All right. So after I mark off the highs, lows, and the 50% for the week, I like to look at where price is at, right? Where price is at in correlation to a couple things. 1, the next swing high or low point, and 2, the EMA clouds, right? So what I'm going to do is I'm going to remove this real quick so that you can see, right? And I'll put it back on. Don't worry, right? We can do this, right? So I can take it off, put it on, not a problem. Just doing that so you all can see it a little bit better, because once I have all that stuff on, it's hard to see where it's at. So the next thing I do with my analysis is that you'll have seen this before. I will look at where price at was right here, this candle, this daily candle. 1, where is it at in correlation to the cloud, right? You can see that we are overextended, right? And that's just the bottom of the candle, right? That's not even where price closed, right? Price closed, up here. Price closed at 455.3. I actually took it from 454.69.7, somewhere in there. So we're overextended by 3.5 or 3.8 points, 4 points, somewhere around there. And why is this important? This is important for me in terms of the way I trade, is because I always said that we trade price based on a portion of it on the clouds. Whenever we're overextended on the clouds, we always come back, right? It's just a matter of when, right? We were overextend here, and we haven't necessarily made a correctional pullback yet. That's why I warned you all, when it's overextended, it does not necessarily mean that we just slam, options in that direction, right? We have to wait for it. A perfect example is here. Look, last September, we were overextended, right? We were overextended here, over here, over here. It took a couple days and it finally came back, and it went from 453 and all the way down to 442. So 10-point drop, and it came back up, and then it was overextended again, and then it made from 451 all the way down to 420, came back up, and then eventually dropped to 407. So not saying that's what's going to happen this time. It's not going to make this massive drop back down below, the low in October or anything, but it's just that every single time you notice where it's overextended against the cloud, it pulls back. We can look at October, right? October, right around Halloween, overextended downside, and what it do? Started pulling back up, right? You can go back and look at every single time in the clouds, right? Even here, by the time price closed, we were overextended, it pulled back, right? It does pull back every single time. Even down here, overextended, pulls back. Every single time it does the same thing. Overextended right here, pulls back. Overextended here, pulls back. Overextended down here, pulls back, right? And the reason why is because you're trading the 8 and 9 EMA on the daily time frame. So this is what this is. This is all this is. The 8 and 9 is right up here, 21 is in the middle, and 34 is on the bottom, right? When it's bullish. When it's bearish, 8 and 9 are down on the bottom, 21's in the middle, and 34 is on the top. This blue line here is the 50-day moving average, and the yellow line is the 200-day moving average. Just in case, those are the indicators I use. Everything else is just looking at it and understanding what price is doing and looking at the shapes of the candles and whatnot. And I can look at the candles right now because I'm so used to it and tell you what number it is, right? This is a 1. Why? Because it's inside this one, right? This was a 2 up, failed. This was a 1. This was a good 2 up, still 2 up. This is a failed 2 down, failed 2 up. This was a 2 up, broke this, right? This was 2 up, but turned into a doji. This was a 2 up. This was actually an outside bar, right? So I don't need an indicator for that. I can see it because I've done this long enough to see that. So now we have our highs and lows in 50%. We know now that price is overextended against the EMA class. So we are going to be expecting some kind of pullback. The reason why is because when it's overextended by a good portion, good price amount, it just means that price went up very, very quickly, very unorganically, as I like to coin it. It just means that something caused the price just to shoot up, and there's just a lot of people that are trapped, right? People were trapped here at the 430s, people were trapped at the 440s, and they're waiting for this to come back down so they can get back out. So eventually price will come back down, right? Unfortunately, we just don't know when, right? And we don't know when just looking off that, right? We have to play other things. So like I said, we're going to look at price in correlation to the clouds. We know that now it's overextended. We're also going to look at where's the next swing high and swing low, right? So we know the next swing low is right about, this, I guess somebody can say right about here, but the true swing low, really, in my opinion, would be right about here at the 430s. The next swing high, where does that be? Well, we just took this one. We took out September swing high already at 450, and we took out early September swing high at 453. The next true swing high is really getting me back in July, and it is right here at the pretty much 460 mark, right? So that's important because we know price wants to go toward these swing high, swing lows, and ICT will call it, liquidity, right? That's where the liquidity is at, right? Because that's where people are looking to put their stops, right? Up here, down here, down here, down here. They put it up here and they got stopped out. That's why you can see once it hit here, it teetered it around, eventually broke out, hit here, same thing, broke out, came back, broke out. Now, so we're looking at the next zone. So the next thing I'm going to mark off is this swing high. Now, you can label it whatever you like to call it. I like to call it swing high because that's what it was called in traditional technical analysis. I like to label it as much detail as I need so that I can see it. And I like to shift everything over so that when we're trading price that day, it's not just a line on my screen. Because look, I can put it here, and as soon as I go down to smaller time frame, all I see is a line. Sometimes that might confuse people. Like, oh, what is that line? I can't remember. You might have to pan all the way back out. Like, oh, okay, that was the July swing high. So for me, I like to put it here, right next to the price action. So at least when I go back into the time zone, I'm like, oh, there we go. That's July swing high. So that's the next thing that I like to do. And then the other thing is that I like to look at obvious imbalances, right? Imbalances means that where there was a disproportion between the buying and sellers, right? Or the buying and selling, buyers and sellers, bulls and bears, whatever you want to call it. So next thing I'm going to look for obvious imbalances, right, is going to be these gaps. And the color doesn't mean anything. I actually was doing something for you all early in the week, trying to show you guys imbalances. So I'm going to change it back. Okay, so I'm going to label the gap. So gap is from 441.33 to 446.09. And let's look for other gaps, right? There's another gap down here. And it's always to the wick, right? We don't go to the body. I know some people in old traditional technical analysis may just say use the body, but because we trade all price, because that's where liquidity is created and balances is created, that's where stop orders are at, stop losses at. That's why it's important. And then we identified there's another gap down here. And yes, if you're asking, there is sometimes regular gaps or traditional gaps that you all have come to know and seen does align with fair value gaps, right? It does align in some instances, not all instances, but in some instances. All right, so now we got all the gaps to immediate gaps to the downside. I mean, if we go back to, a longer time frame, meaning that we go back several years, you might find some more to the downside, but realistically, we're not going to look at those because we're not going to hit 200 anytime soon. That's just the reality of it. If the market drops 200 to 200, that's 50%. That would be pretty much a Great Depression. We're not going there. Let me just see. I'm just looking at the comments real quick. So that's a great question, the bull. The bull, you guys all can see in the chat. It says one candle shape. I says on candle shape. Do you pay more attention to SPY for direction or ES? So for me, it's ES, and the reason why is because that trades pretty much 23.6, right? Meaning that's constantly trading. Even on holidays, you guys, as you saw, it was trading on Wednesday night, it was trading on Thanksgiving Day, it was trading on Thanksgiving night, it traded on Friday and whatnot. And it will open up tomorrow night at 6 p.m. Eastern time. So that to me is the leader, right? And I've used that in the past when many of you probably didn't even know about futures. And that's how I knew, saying like, hey, SPY's going to open up here tomorrow, open down there tomorrow. It's because of what futures did. So futures, that's why it's called futures, right? It's leading. So, and some people may disagree with it, and that's fine, right? But for me, that is what comes first, like the chicken and egg, right? It's very debatable. But for me, ES futures or NQ for the triple Qs is the leader. And, we can even go further later on, maybe not in this video, and say which one is the true leader, right? Does NQ lead ES or ES lead NQ, or does the Dow Jones, right? And whatnot. And then we can get more complex with it. But for the sake of today's discussion, ES leads SPY. Sorry, I'm just looking at the other questions. When do gaps lose significance? When they get filled so when gaps get filled, to me, they lose significance when they get filled. For example, the gaps to the downside, they lose their significance once they get filled and they get broken through. Now, if they get filled and, if they get filled, where's my tool? Here it is. So let's say we have price comes down like this and then it gets eaten up and the price closes here. Well, to me, sure, it got filled, but to me, there was so many orders in here that just absorbed this whole entire push back up. So to me, this is still valid. That means there's still orders here waiting to be hit again. Now, the question is, we don't know how many orders there is. Is it as strong as before? If it's weaker, or is it even stronger? And that's where tools such as maybe like quant data stuff, unusual whales, or like order flow, or there's a lot of these other things that you can get nowadays that will show you how much order here between the buying and selling. So that is how I utilize these gaps and interpret it and analyze it. If we fill it and we close like this gap is no longer valid to me anymore. Now I'm talking about gaps, not about fair value gaps. It's just gaps. And the reason why is because, well, we know that the gap means there's an imbalance between the two sides, right? So once it gets filled and it doesn't reject, or like what we call gap rejection, well, that means that all the orders that were here at that moment are gone. Because, why is it gone? Well, it's because price went through it and closed below it. So that's what that means to me. You may interpret that differently, but that is how I utilize it, and it has worked consistently for me. And you can research that yourself to see whether I'm right or wrong. But that is what I've always done for the decade that I've been trading and whatnot. So hopefully that answers your question, CJ. But great question. All right, so now we have identified the gaps to the downside. We want to know if there's any gaps to the upside, right? And look, we do. We have a gap up here. It's hard to see from here. Sorry, I think you guys can't see it. Let me move my screen a little bit more. There we go. So I don't know if it got filled, but we will find out, right? So we'll take it to the closest one candle here and see where the gap is, right? So here's a perfect example, right? It hit this gap on the 20th, and rejected, came back, went above it, and it's still sitting in it, right? So let me see. Let me just delete some of these out so you can see it. So you see that? So to me, this is perfect. You know, it's like deja vu. You knew what we were gonna do, CJ. So this is still in the gap. So this gap is still valid right now to me, because that means, like, look, we came back into it. That just because gaps acts as magnets, right? Gaps acts as a point of attraction. You know, whether we gap fill or we gap reject is really the question. That's how we, look at it and play it. So right now, to me, we're still in gap. Even though we wicked above it, I know a lot of you traditionally have probably said, oh, well, we broke through it, so the gap's no longer valid. This is still a valid gap until Sunday night or Monday morning. You know, if we break through it and we close above it on Monday, then to me, this is no longer valid. We have taken out all the orders out here. What may happen now, though, what we might want to keep in mind is that now all the bulls that, all the bears are gone on this point. Now all the bulls may be loading their resting orders here or putting their stops here. So now we have the stops lost for the longs here. So that is something you want to keep in mind as we go forward. But in terms of a short position, this is no longer going to be a point of rejection for me. This is going to be a point of support and demand for me now at this point once we break through. So hit me with a 1 if you're following me so far. I want to make sure we are all on the same page before we keep going forward, because if you're lost, now's the time to make sure you understand. So hit me with 1 in the chat. We're going to take this slow by slow by slow. That's it. All right, assume you're all still digesting this. Nobody's hitting me with anything. All right, there we go. Yeah, there we go. Participation points for you all. Everybody wins a medal. We all are winners in this place. Okay. Great. So if you notice, now you're starting to see my chart starts to get filled, right? I know it's a lot. Some people will literally say that you don't need anything besides, prepare price action. And I agree, right? A lot of people don't. A lot of people can literally just say, oh, I know, like I see the swing. All I need to know where's the swing high and where price is, and I can trade it. And a lot of people can do that. As you can see, I don't have any really indicators. I have the clouds and the moving day averages, right? I don't have all this other nonsense on here, right? Everything else is self-put. So once you get to a certain point, you no longer need it, right? You might want to add these things just because, mentally it helps you out. But, in terms of, your trading, you're not going to need it all, right? Again, like I said, there's multiple ways to trade. But to me, I found that this helps me, and I know that this helps you all to see certain areas, because we can see that, once it gets to a certain low, this point, we're going to expect something to happen. And once it gets into this gap, we know something's happened. But sometimes if you don't put it on there, you'll forget about it. So I like to put, just enough information on there to help me out with it. Okay, so we have now identified every single high and low and 50% on the 3 major time frames, right? Monthly, weekly, daily. That's why it's called the top-down approach. Now we have identified the immediate gaps that are applicable to our current price action, right? Obviously, the 423 and 430 not going to be applicable for this coming week, in my opinion, right? That would be pretty much almost a 30-point drop. Not that it can't happen, right? We've seen this crazy drop here, and then we've seen this crazy rise here, and this was only a matter of really 2 weeks. So it can. I just don't see it happening yet, especially because, look, we have the monthly 50% here, as a point of, balance or a point of pivot. All right. I want to scroll back more now, because now, look, if you look at my chart, you can see it says 2021 and 2022. I'm going to go back here to see if there's any more gaps here, right? So price is currently around 450, 455, 454, right? Somewhere around this range right here. So that's why we look. So is there any gaps here? No gaps here, right? Do we see any gaps here? Nope, no gaps here. And this is all-time highs, right? This baby here is ATH, all-time highs, right? So that is the ultimate goal. And yes, we will hit this. We will hit this. probably in 2024, unless we have a recessionary move, you know, but we're probably gonna hit this in 2024, and don't be surprised in 2025 we hit 500 plus, maybe mid 500s. It's just economy is just gonna move forward, so don't think that we won't hit 1,000 with S&P unless they're gonna split it or something like that. But other than that, it's gonna hit these numbers in the course of our life. So we did not find any more immediate gaps when we scrolled back pretty much 2 years worth, and that was all-time highs right here. So we're not gonna find any more gaps to the top side. We will find gaps to the downside, but again, we're not gonna be concerned with it because I said we would have to break through all this here first before we even got to the downside. So there's no point. All right. So now that we marked off all this, I like to go back to a bigger time frame to see what price is telling me, right? So now I'm on the weekly. I'm on the weekly time frame. So I look at this and I want to see what price is telling me. And a lot of people are still looking at this and they're like, don't realize this. But look, if you look at a higher time frame and a longer duration of time, you can see that the market is actually bullish, right? So this was, we came up here. Here's a low, and then we made a higher high, a higher low, and now potentially, we might be, this might be the move where we make the higher high up somewhere around here. Around maybe I can tell you when we hit 500 the first time, it's probably going to come back down 10, 20, 30 points, right? You come back down to all-time highs, 480, maybe even break back to this point with the 460s, right? I can tell you right now when that first happens, right? We don't know when it's going to happen, but I can tell you when it happens, that's what's going to happen. So on larger time frame, look, market structure on larger time frame is bullish, right? A lot of people probably couldn't see that even when we had this crazy move to the 345s back in 2022. But like I said, if you're a long-term investor, you were not going to get scared because you were still saying, hey, we're still bullish. So now we identify market structure on a larger time frame, higher time frame, if you want to call that. We know that it's starting to turn bullish. Now we're going to look at patterns, right? I like to look at patterns. A lot of people don't. A lot of people's like, okay, well, these patterns really don't mean anything, especially with the new wave of trading, especially with ICT and whatnot. A lot of people will discount patterns and whatnot. And, very valid argument, very fair. So we have this, cup, and then we had this handle that we pretty much broke out of, right? We broke out of it like last week, right? This was that big, crazy, massive weekly candle I told you about. We closed above it. This last week, we came up some more. So at least see this week, we're like, hey, if we're playing a pattern, we know that once price breaks out, we're expecting, if it continues up, then it continues up. If it doesn't and it stalls out, we're expecting maybe a possible pullback to, the trend line, which, it's kind of ironic, right? This trend line right here, you can see. Let me zoom in so you can see it. And I'll go back to the comments. I know some people are leaving comments right now. So we can look at this, right? Now we go back and we look at this. We broke out. We're going to anticipate the hitting this swing high right here. It's not, I don't want to say, traditionally, it we say the double top and whatnot, but in terms of the new wave, like they like to call it liquidity and whatnot. Once we hit this, the next point for us would be this point, right? You can see it. Ooh, that's not what I wanted. There we go. So mark this off out in your charts as well because this is important. This is going to be, what week is this? March 2022 swing high. So I'm going to move this all over my charts because that's very valid because look how close it is, right? If we break 459, you're going to want to know where it goes next. This is only not even $3 away. This is like $2 and, 50 something cents away. And whatnot. But once we hit these two, we might do a pullback. And we might pull back to this trend line, which also aligns with the monthly 50%. You see how things are starting to come together, starting to come to fruition on that. That's why it's important for me, at least my way of trading, to mark these off because, when we get here and all of a sudden it just bounces violently, I'm like, why? It was just a trend line. Oh, it also happened to be the 50% on the monthly. So now we have identified patterns. We see that we have a cup and handle pattern, right? Now I like to go back to the daily to see if there's any kind of short-term patterns that we're looking at. Like so, on the larger time frame, we know we have a bullish pattern. On the short term, do we have anything else? And I'll remove this because I don't like to have a big gray shaded box. I will just draw a line because the only thing that's really important is really for me is really just gonna be this this downward trend line, right? We broke through, which has been the gap. Now I'm gonna look at any kind of immediate daily kind of time frame patterns, right? So the only thing obviously everybody's watching is, obviously probably this potentially rising wedge. And I know price kind of broke out of it, but I'm not gonna consider that a true breakout just because this trend line, upward trend line is so steep that to me, I don't want to rely totally on this right now as a breakout. I rather, if it continues up, I will move the trend line to the bottom of this current candle. Now you can't see it because it's hidden between all these lines and whatnot. So we'll go back to climb. I am clear on gaps. Do you use fair value gaps in charting? Hey, Love Golf, I do use fair value gaps in my charting and whatnot, and I talked about it. I don't use it constantly, meaning that I don't mark every fair value gap out because there's a lot, right? And fair value gaps, while I love it, I think it's a great strategy, great technique to utilize. Unfortunately, because many of you are new to using fair value gap and the whole ICT trading, it has not been a benefit to you all, right? You see a fair value gap top side, you're like, oh, I'm going to play this fair value gap. As soon as it hits it, I'm going to take the short. And it doesn't, right? It keeps going up, right? Because you don't know the other elements of how to utilize fair value gap, right? Well, it's really, fair value gap on daily, does that trump the weekly and the monthly? And was the structure bullish, bearish? Do we have a bullish imbalance, bearish imbalance? We're hitting a breaker block or we're hitting an order block. Were we in a discount? Were we in premium? Do we have equilibrium, equal highs, equal lows? Do we take out liquidity? Buy side, sell side? I can go on, right? The point is, if you don't know that all, it's not going to be used to you because many of you are just trading what seems to be working on social media, right? Those people that are showing you that have come to understanding how to utilize it and understand when to utilize it and what it actually means when we get there. And look, fair value gaps, there's a fair value gap here, right? How you find fair value gaps for those that are interested is that you take, you take three candles, the preceding candle, current candle, and the subsequent candle. That's your fair value gap. So here's a fair value gap. This is your fair value gap right here, right? And let's say we were going up. We're going up. All of a sudden, look, many of you are, as soon as we hit this fair value gap, I'm going to take it long. What did it do? Just fucked everybody over and went down, right? See, that's what I'm saying. So that was a fair value gap but look what happened, right? We took out some highs, we hit some zones here, and it came down, right? There's another fair value gap, to this side right here. This is fair value gap as well, right? This is fair value gap, right? Oh, we're making a recovery. We're breaking above the clouds. Hit the fair value gap right here. I'm going to go long. Oh, what happened? Came back down, right? So you need to know how to utilize it. That is why I'm very hesitant to throw all these things onto you all because it can really screw a lot of people up. But same thing, right? You got to know your daily bias, right? That's part of the new wave too, right? Daily bias. We got to see which direction it's going. The easiest way to do it is where did price close, right? For me, I determine my bias on where price closed based on the fibs, right? If it closed above the 50% and we're near the price action for instance, if we close above the 50% of the previous day and we are near the previous day high, well, I'm going to have a daily bias that we're going up because we're so close that price, everybody wants to push price because they want to break the high and they want to make that what we call a strat 2 up. But if we're like close above the 50%, we're like near the 50% mark, well, I'm going to see what happens, right? What happens when price opens? Did we go below and close below and then price never gets above 50%? Well, if that's the case, then we're going to the downside. We're going to make that 2 down. If we close below 50% and we're near the yesterday's low or previous candle close low, then I'm like, hey, we're probably going to make that. We're probably going to take out the low and then we're going to have a rejection and come back up because what they do, they took out the liquidity on the downside or the swing lows. And then now they want to go back up to a midpoint somewhere and, do the intraday swing highs and take out that those stop losses and then continue. It's like a ping pong effect. That's why if you look at the market, right, up, down, up, down, up, down, up, down. That's all it's doing. It's just really just going there, taking out everybody's money. That's their goal, is to collect money, not to make you money. They're there to collect money out of us. But Hopefully that answers your question, Love Golf. But I do have fair value gaps in my thing. I've talked about it. And if you ever see anything on my charts that says imbalances and what, that's pretty much a fair value gap, right? So that's what FVG is. You can do it on any time frame, and you can do anything we talk about on any time frame, right? We can draw patterns out on any time frame. We can use the clouds on any time frames. You can even find mini gaps on any time frame if you want. That's why sometimes when we look at SPY, we look at the charts on a smaller time frame. You can see there's gonna be gaps sometimes. Let me see if I can find one. Right, there's a little gap right here. You guys can see that there's a little gap right here. There's a little gap, right? And here's an instance where a fair value gap would work, right? This is a fair value gap on the 30 minutes. What happened? Price came down this FVG right here. Couldn't break it. Eventually, you could have taken it. Stop loss would have been below this fair value gap, which still would have been decent points, right? You would have to be able to stomach that. That would have been from 412.21 down to about 410.66. So you would almost have a like almost $1.50, $2 stop, and then you're looking for a move right down here. You'd be looking for a move to take out this swing high, and this swing high. Eventually, we didn't hit it on this trading day, but eventually you can see that we did take it. But yeah, so hit me for one, Love. If you does that make sense to you? Or does that make sense to anybody? I just want to make sure you guys are all following. So I will give me a second, Gio. I'll answer that. Let's see. So let me just continue my charting, and I will go back and answer your questions. Right? Okay. I'm just gonna recap what we did so far so that everybody can follow, and hit me with one if your charts are at least close to what mine is. Like, I don't want you to get behind. I want to make sure you guys and girls have your charts to where, because this is literally gonna be your chart or what I will tweet out Sunday night going to Monday morning. So this literally is the chart already. So if you have it, congratulations. The 20 of you that are on here listening, you have the charts already going into Monday. Great. Okay. Now that we have this, right, let's just kind of analyze what we think is going to happen. And then I will answer your question. So we already know that, look, price, we can tell this is bullish. The market is bullish right now, right? We have changed market structure, right? So we were bearish here, right? Lower low, lower high, lower low, lower high, lower low. All of a sudden, higher high, and we say higher high, higher low, higher high, right? Because we broke this, right? So we changed structure. As soon as we broke this 430, market structure shifted. And if we break this, July swing high here of 459.44, we definitely have a change of market structure. And that's why we know it's bullish, right? Market structure is bullish. Doesn't mean we can't have pullbacks, right? That's the trick, right? As day traders, like most of you day traders, scalpers, right? This is where this daily structure sometimes screws with you, because this is something that if you were a swing trader and you saw as soon as we broke this and we gapped up, you should have, we pulled back, we coming lower. This, on November 16th, that was your signal to swing long, because now we broke above this 438. And we held above it, right? But we broke up on it on November 10th, pulled back, and you can see we hit the clouds, couldn't go any lower, and then we gapped up. That would right here, this gap up was our signal that this structure has changes, and we should be going long at least for the next, several trading days, several weeks, if whatnot, right? Now we had this another leg up. We might have a little bit of consolidation here. The weekly 50% week low, and then we might shoot back up and try to take out these two swing highs, and then find some more consolidation, or hey, have a correctional pullback to the mid 440s and whatnot. Excuse me. So for me, I have identified this. Look, we have a bullish momentum right now on the daily time frame. We have a bullish momentum on the weekly time frame. My concern is this, for the upside. You can see on the weekly time frame on your screen right now, we are overextended on the EMA clouds significantly, right? we're almost 10.7 points on the weekly, and I showed you earlier about almost 4 points on the daily. And you can see when we did, this July swing high, look where it was in clouds, right? Back in mid-July, we were overextended and we went up another week. And then we just had this massive down. And then we had a continuation, 3 more weeks of continuation. And we had a consolidation week up, and then we came down. But it came back to the cloud. So that's my concern going to this week. While I do expect a move up on the beginning of the week, unless futures decides to tank tomorrow night, I do expect us to take out potentially July swing high and maybe March 2022 swing high, and then we start to pull back. And that might, I don't want to call, maybe it's not the Santa Claus rally, maybe it's the Santa Claus, the Grinch sliding down the hill, rally or drop as we might call it. But I'm also, like I said, I'm going to move everything so you see it. I'm also looking for this to up because we did close above the 50% the previous day. And we have you can see on the strat, a 2-1-2 possibility, right? So I'd be looking for us to break at least above Friday's high. And the target would be Thursday's high. Or Wednesday's high, I guess. Wednesday high, because this was not open. So this was Friday's high. And then we'd be targeting Wednesday's high. And ultimately, we'd be targeting this July's swing high. And then that's what I'd be looking for on the daily time frame. At least on Monday, Tuesday. On the weekly, you see that we had a 2 up. I was still, because price closed above the 50% on the weekly and daily, and we're seeing this gap, I would like for us to still make a 2 up on the weekly, but then have it come back and be a failed 2 up and close somewhere within this 453, like be around the weekly 50%. And then next subsequent week, which would be, let me look at my calendar real quick. So next week would be 27th. Next week actually Friday will be the first day of December. December 4th through 8th is which will be this 2 weeks from now, is when I would like to see a potential pullback into this area where the gap is, and to close the gap. Well, 2 gaps. The gap, actually real gap that's created, and also the gap between the EMA clouds and price action. So that's what I'm looking at going forward into Monday, right? I still expect price to break out of this gap here, test these swing highs, and possibly, reject, and then start downtrending into 2 weeks into December. That's what I'm looking at. We don't have any real fair value gaps right here. We actually don't have any fair value gaps. If you are trading ICT, this will be where we have an order block, right? This is where the order blocks are, right? So because we have a lot of supply right here waiting to be filled. And your next order block is going to be right back here. Very similar to supply and demand, but not the same. A little bit different meanings. And you guys and girls can kind of research that. I'm not going to spend too much time talking about that tonight, because that could be a whole nother class in itself. But that is what I'm looking for going to Monday, right? So now you see what I'm seeing, right? We have the overextension. We have a 2-1-2 combo. We close above the 50% on the weekly, the monthly, and the daily, right? Now we know that on the weekly time frame, we have this cup and handle pattern we broke out. On a daily time frame, we have this sharp rising wedge, which I'm not exactly say that, that this is a true breakout. And we also have a inverse head and shoulders, right? Shoulder, head, potentially, pull back here into this gap. This is what I like to see, somewhere around here. And then we shoot up, right? Shoot up for the all-time highs. Not saying that this is going to happen in a week, but maybe in early 2024, this is what we're going to do, right? So just something to keep in your mind and think about, right? Just don't keep focusing on just one point of view and snapshot as we trade. Let me just quickly go back to your comments and see. So Gio asked me, what time frame do I use to trade? I am not a scalper. That doesn't mean I don't scalp. I don't truly scalp. I know a lot of people trading like to sit in trades literally for, 30 seconds, 1 minute. That's true scalping, because you're literally trying to get in and out for these small movements, and nothing wrong with it, right? Everybody trades a certain way based on their personality and what works for them, and there's a lot of great scalpers. I hold my trades longer. I've sent you guys all screenshots of my trades, right? My average trade time I don't know, anywhere from 2 to 6 hours, right? That's how long I am in trades for. And the reason why it's that long is because I don't trade options primarily anymore. I am more into futures, so I can trade, from pretty much from 6 p.m. the night before into 5 p.m. the subsequent day. So that's why I have trades that you might see like it could be 10 hours, 12 hours, whatever, right? But I'm in my trades longer. So for that kind of trading, I tend to use. I have 6 time frames I trade on: the 3 minute, the 5, the 10, the 15, the 30, and I interchange between the 65 and 60 minute. Let me just break those time frames down for you real quick. If you are a scalper, a day trading scalper, you're gonna want to use the 1, 3, the 5, and maybe the 10 minute, right? Those are gonna be your best friends. If you like to, hold your positions a little bit longer than 30 seconds or 2 or 3 minutes, then we usually traditionally use the 5, 15, 30, and 60 minutes. Now, if you're a swing trader and you're looking to go long, meaning that you want to swing into the end of the week or even possibly several weeks, then you want to use the 4 hour, the 1 4 hour, and the daily and the weekly. If you want to take leaps, you can look at the month, weekly and the monthly and whatnot as your time frames. So hopefully so for me personally, like I said, I use 3, 5, 10, 15, 30, and between 60 and 65. Hopefully that answers your question, Geo, and whatnot. Let me see. Just reading a question. And then, yeah, I don't use anything. I never use the 1 minute. I'm never on the 1 minute, and I don't use anything less than 1 minute. I've seen crazy stuff. I mean, some people use 30 seconds. I mean, I've been starting seeing people using like 15 seconds. Some trading views will allow you to do that. You can do 15 seconds on here. I think you do 15 seconds. I could be wrong. Let me see. I don't know. I thought I could. Pretty sure. Yeah, look, you can do 1 second on here. So yeah, it's on here. It's insane. This is what it looks like when you trade on. This is 15 seconds, right? But anyway, not that's what I would suggest. But yeah, Gio, hopefully it answers your question on the time frames. Yeah, so just to keep piggyback off your question, and I'll get to everybody's question. So in terms of the charting session, we're pretty much done. This is high level, right? I haven't even talked about the quad, which is Amazon, Microsoft, Apple, and Google. I haven't even looked at the VIX, which is the volatility index for the S&P 500, and I haven't looked at the DXY, which is the dollar, right? And I haven't looked at the imbalances between SPY, triple Qs, ES, and NQ and whatnot, right? There's a lot that goes into analyzing for me, right? Maybe a lot of people say it's overkill, a lot of people say it's not needed, but for me, it works, and it gives me assurance and confidence in my particular view and trade and whatnot. But anyway, let's just go back to your question, right? So let's see, Gio. Yeah, I've been mainly executing 1 minute, but trying to size down and hold my trades for longer than 2, 3 minutes. So I would say this first, Gio. If you have been consistently successful with your trading, and this applies to anybody, if you've been consistently successful with whatever trading style you do, scalping, intraday long swing trading, or swing trading in general, there's nothing wrong with continuing to do that, right? If the only reason you want to switch up is maybe because you want to try different things, or you find your current style a little bit stressful, you want to kind of see if there's something else that will give you a different mental pressure, then I would say try it. But if what you're doing works for you, nothing wrong with that. I will say that if you size down, it will help you with a lot of things, right? And that's what the essence of power of one is, right? The power of one is basically taking a smaller position. That doesn't mean necessarily take one contract, right? It just means sizing to appropriate size that you can handle mentally and financially. And you will see that once you do that, you will be able to stay in your positions a lot longer than you have before, right? You will be able to ride through the waves of the Red Sea, and then you'll be able to see nothing but the lucky leprechaun of green and his rainbow and pot of gold at the end of the rainbow, right? And the reason why is because you can handle these hiccups, these bumps, because prices get going in the direction that you were foreseeing. And now when you are in a smaller position, you do not get so nervous and stressed out, right? Especially if you're in one futures contract, right? One futures contract, when you're down 5 points, you're like, oh, I'm only down $250 versus when you are in 5 ES contracts and you're down literally 1 point, you're already down minus 250 and you're already stressing out, versus 5 points on one. And it allows you to, make great gains on one contract as well. I've shown you videos, multiple videos. I've shown you my entries. I've shown you my P&L, right? I've shown you everything you all need in order to confirm that. And many of you have done that. So I would say if you want to hold a little bit longer, you need to size appropriately and consistently. And honestly, everybody that has started to swap to that method of trading has seen much better consistency, and with that, better gains with that as well. And that doesn't mean that we're trading longer, right? That means that we are literally taking one trade or one or two good trades, maybe sitting it for an hour or two, and we're letting it do its thing without really stressing over it, versus what many traders are doing, where they're literally trading for an hour or two and they're literally trying to scalp every little movement. And you're like, oh man, am I right? Am I wrong? Maybe you're right on some of them, wrong on the others. And the ironic thing is your P&L will come back out almost to the same as if you were to trade lighter with Power of One, and actually probably even worse. I would say everybody who's been trading the Power of One has seen bigger and better and more consistent gains than they did when they were sizing heavier, when they were scalping with a bigger lot size and whatnot. So hopefully that answers your question, Gio. I'm just going back up. Let me see. So, Golf, you asked, am I clear on gaps? Do you use, no, you already answered that. So with my strat, Motivic, you asked, so with my strat, how would you find the entries using the clouds and the 50%, and what gives you confirmation to trade? So for me, when I'm looking for a trade, I will look at where price is in correlation to a key level, and also my pivots. That's something I didn't do tonight because calculating pivots is actually a mathematical equation. You have to take the open and close of the candle and the timing of it, and then the subsequent candle, and then do it. We have to use algebra and then calculate it out, and it's just something that takes a little bit longer, and it's not something that I want to sit here and spend 30 minutes just to calculate a pivot for you all. When we have a lot of this basic things that a lot of people need. So, but for me, I like to see where price is in correlation to a key level. So we can break this down. Let's just go here, right? We have a 30-minute chart here. So this is a 30-minute chart. Actually, I'll go to 15. So 15-minute chart. This is what we have for SPY going into Monday. So you can see where price is like, right? Look, price is closed at 454, 455.4. The daily high is at, this was the daily high. Yes, pre-market, or actually, I apologize. It closed somewhere right around here, 455.3 something, right? That can't be right for the daily high. Give me a second. Let me just make sure I have the daily high right. There we go. Maybe something was off. There we go. So you can see the daily high is here at 455.5. Price, you can see right now is below, right? We tapped above it in after hours and whatnot, and then pre-market opens. So pre-market, as long as pre-market opens above the 50% here, right, and can't close below it, I'm going to look for a long. I'm going to look for a long that bounce off this, and I want to see a rejection off the 50%. And, potentially, if the clouds are still bullish, I'm going to say, like, it's riding it, right? So then I'm going to take it at least to the daily high, right? And once we get here, I'm going to be watching my position to see what it's doing. And as we break this daily high, I am expecting to take out, this pre-market high in Friday's action. The 15 minutes shows me is bullish on the clouds, this is not a great candle action right here because it's after hours. 30 minutes, same thing. Clouds are bullish. I still like to see, what it's doing. If it's forming, if we see, like, if it pushes down and it has a strong wick on the bottom, like these right here, then I'm like, okay, buyers are here. I'm going to take that long, right? And then I like to see what the 5 minutes show me. The 5 minutes give me my entry. 5 minutes give me what I use for entry, right? Well, 5 minutes, clouds are bullish. Look, it came down, the clouds couldn't break through and pushed right back up. So that would be for me. Like, that's just an example. If we, for some reason, break through the 5 minute cloud and we close below 50% and can't come back up, now I'm looking for a entry to go short. And my stop will probably be somewhere in pre-market high or maybe even daily high, because I'm looking for maybe a 1-to-1 because price is so tight right here, right? 454, 455. It's pretty much 1-to-1 ratio. So that's to me, it's not a bad risk to reward. Not optimal, but we'd be looking for something like that. 5 minutes here, we see there's an inverted hammer. Clouds are still bearish here. We'd be looking to see maybe taking a short here. 15 minutes. Let's see what the 15 minutes are showing us, right? 15 minutes. Well, this was look at this. This was a bearish inverted hammer, and you could have taken a short. On the strat, would have been, 2 down, fell 2 up, and then we'd be taking this 2 down, and we'd be targeting somewhere here, right? Your entry technically on the strat would have been 454.9, and this came down to 454.75. Not the best movement, right? But you gotta keep in mind Friday's action was really tight. This would be a terrible day to use to really trade, and that's why I tweeted out, don't trade on Friday because it's just not great. But that's examples how I execute trades, right? It's not the only way, but it's certain ways, right? We looked at the number of combinations, correlation with the clouds, what the candle stick itself is telling us, where it is in relation to the highs, the lows, to 50%, and on multiple time frames, right? If we go on 65, we can see, what it's showing us. But again, this last couple of days just not great because of the short days and whatnot. But on other days, it gives us better correlation of what price is doing on different time frames. So I'm just going through. So hopefully, Motivate, that answers part of your question. I'm just trying to go. I got a lot of questions from you guys, and just trying to make sure I get to everybody's question in some kind of capacity. Hey Mo, I'm not sure you said something not the same but close. I'm not sure. Maybe that was the fair value gap and gaps I was talking about earlier. But let's see. Can you please recap how you use the daily? So Love, I just kind of I just went through the daily 50%, right, or the 50% in general, right? So the 50%, if you're a fib trader, is basically the pivot point, right? That is traditionally used as whether we're going to become bullish or bearish depending on which direction we're going, right? That's why the 50% is powerful, because in my own view, in my opinion, I think part of the market is traded on algorithms, meaning that there's scripts out there that are run by, whether it's institution, market, money, market makers, etc. Part of it is ran on scripts that they program in, and the reason why I believe that is because there are traders that will use scripts to trade for them. Like, hey, if price does this, then do that. Like almost like an if and statement in Excel or programming and whatnot. So a lot of people will program the same thing, saying like and it could be on their personal trading style. Like if we break the 5-minute cloud with a 5-minute close on above the cloud, or the 890 EMA, and we have an inverted hammer, then take it long here and exit here and stop here, right? So there's scripts out there. You guys can YouTube it and you will see there are scripts out there that people use to trade, like bot trading, right? Nothing, in my opinion, legal about it. It just takes out the emotion and just runs on auto program. So that's why the 50% is very key and critical, in my opinion, when it comes to trading, because this will be, even on a psychological level, a lot of people are looking at this, like in a human level, we're looking at this 50%. We're like, okay, if we break this, and either way, we're going to, go up or down. And you all have been here long enough to know that, I'm always talking about the 50%, and you see what happens, right? When it hits the 50%, it just rejects. I think on this day, it hit the 50% on one of these, on the weekly or something like that, and just rocketed up. So that's how I use the 50%. And also with the strat, let's just say we take out the high on Friday's high, and then we come back and we break below the 50%. Well, now there's something called the 50% retracement rule, right? And it's a little secret I'll let you guys in on. And this is only in the strat. What happens is that when we take out the high or low of a previous candle, and then we retrace 50%, and there's sufficient time, then we have a high probability of going outside day, right? That's why there's been numerous times where I have on live and also on Twitter posted that we're going to go outside day. And it's happened more often than not when I call it out, right? And that's how we do it, right? Not many people on FinTwit or FinX, whatever you want to call this, tells you that, because they don't know that, right? So that is why the 50% to me is very critical in my trading and my analysis. So hopefully that answers your question, Love. Golf. But if not, we can talk more about it. Let me see. Mo, you said if I'm holding for like 10 minutes, that is a scalp. Yeah, a scalp is subjective, right? Duration is very subjective to certain people, right? Some people might scalp for literally. I mean, like I said, there's some people that are trading on a 15-second time frame now. So, a scalp really is just a trade that, I think the technical term is really a trade that you're not looking for a longer duration, and also you're not looking for a crazy move, right? You can get a crazy move. Don't get me wrong, right? Most scalps are pretty much going to be high volume, high transactions, and really for a heavy load, right? That's what most people are. They try and load up, get a quick movement out of the price, and then get out. That is the nature of the scalp. Now, the duration of it is really subjective, but for me, I would say anything less than, honestly, anything less than 15 minutes is a scalp. Anything more than 30 minutes is no longer a scalp for me. Just because I would say most traders are not holding. The only reason you're holding a position longer than 30 minutes for a scalp is because you were wrong, or you had terrible timing. That's the truth, right? That you can say, oh, I've been in a scalp for an hour. Well, reality is because you probably got in, you were wrong with your initial analysis, and you just held, and you're waiting for that reversal coming to fruition. Or you averaged down, and you were able to bring your cost average to a point where you can get out. That's really the only reason. I mean, most of the people that are scalping or trading as a scalp, they're in and out within 5 or less minutes. That's just the most part, because you go in heavy and you just want to be done and move on to the next trade or move on to tomorrow. So again, no, there's no, like I said, subjective, but that's just my view on it. Geo, yeah, I've been mainly okay, yeah, we were what EMA clouds encourage use? I think a lot of people are right. I use Sadie's pivot ribbon. So he has modified his cloud based off of Ripster's EMA cloud. Ripster's the original creator. Yes, the same Ripster from the Atlas crew with Zach Morris and all that stuff, right? We're not going to talk about that, but that's the same guy. But yeah, Sadie's pivot ribbon, I like it because I tend to use that versus all the other EMAs that Ripster use, because Ripsters will have the 5 and 12 and 13, and the 24 and 30 or 50, and then 72 and 90, and then like I think the 100 and 200, right? It's all useful. I just don't utilize my trading that way. I like to utilize the 9 through the 34, especially for day trading, right? But yeah, everybody put in there. But hey, thank you everybody for doing that. That's the beauty of this community, is that you all are very quick to answer one another and help one another out, and that is a objective here in the nation, is that we all are able to answer each other quickly and not mock one another. So thank you again for being positive, guys. Let's see. I'm just reading. I'm just trying to read up the questions. Let's see. Hey, JCR, I don't know what you mean, of course. On course on what? I don't have a course. You mean like, I mean, I feel like I'm kind of running you guys all through a course right now. I don't know. Guys and girls, I mean, like, what I'm doing now, this is what you pay people hundreds of dollars for their time, right? Or in Discord. So I don't know. I mean, if this is not a course, I don't know what it is. Hey, Motivate, I will not do a pivot tonight. It just takes a little bit longer. But the targets, right? Here's the targets, right? You want to know? Look, I already told you the targets. Like, here's the target for Monday. Let's just say futures opens flat and we're above the 50%. Guys, girls, first target is the daily high. Next target is going to be pre-market high. Why? Because this is liquidity. This is where people got in short, right? They got short here, came back up, didn't break it, came back up again, didn't break it. So they're short here, right? So this is where they're going to put their stops, right? So round one. Next liquidity is right here. This is a swing high. This is the high of Wednesday. And then, and you can see that, this is the monthly high as well. The next target is going to be here, 459, right? Those are upside target. Downside target, if we break below this, right? If you get, we technically said we broke below pattern right here, right? We might wait for a pullback, test this, fail. We're going to aim for pre-market, or not pre-market, but, Friday's low. If we break that, here's the next swing lows, double bottom, right? Equal lows, whatever you want to call it. Right here, like 453. We break this, the next one, right? Well, if you want to be a fair value gap trader, here's a fair value gap, right? You might look at this. You want to target the fair value gap, right? You can see on the side, right? 453, 453.4. That's where we look. If we break through this, then you're going to look for this right here. This swing low, 452.49. And look, right here, double bottom pretty much, right? Equal lows, 451.94. And then eventually we're going to look for here. You see how many times it hit this 450? 450 was a huge level. I mean, that is, I'm literally teaching the tricks of the trade right now. These are the points. It always goes back there, right? Right? Because look, you can see, look, it came here on this day, right? So, but hey, give me 1 second, guys and girls. Give me 1 second. I need to get some more water. My throat is dry as crap. Give me 1 minute. All right, guys, I'm back. Thank you for that. Let me see. I'm just reading the question. Target pivots. So, hey, the bull and everybody else. So, that's your targets. That's really your targets, right? That's why we put swing highs, swing lows, daily highs, daily lows, 50%, because that's where price wants to go. If you look back at every single chart, look at every single chart. That's what it does. Okay, remove all this, right? So look, this was Wednesday, November 15th, right? Highs and lows. Took out the low, right? Next day, took out the high. Next day, took out the high. And then we have a consolidation. That's where we have a powerful move. Took out the high, took out the high. Another consolidation. Now we're looking for it to take out at least a high or low of this candle and then potentially high and low of the next candle, right? And then we go to, as day traders and scalpers, you go to a smaller time frame to see where these are at. You know, depending on if you're a scalper, well, then you might be looking at the 1 minute. You might be looking at the 1 minute and see, okay, I'm a scalper, so I know that, hey, we came up, took out a high. You know, we're probably going to take out this, you know, try to take out somewhere one of these lows. Did we get to it? No, not necessarily, but that's how people trade. It's really every single day we're going to be taking out highs and lows, highs and lows. That's exactly what it does. It's just looking for liquidity, looking for the next zone, looking for where the stops are. So that's how we formulate targets, right? We formulate targets based on, you know, the highs, lows, and the 50%. And obviously with the pivots are not really a zone that we're looking to take out. It's a zone where we're looking for a price to go and then see what it does, and that gives us our entry for the next trade and whatnot. Let me see. Hey, Rocky, so your question is, you want to know how to decide where to enter and where I see you rejecting, and then do you wait for it to close the candle? If yes, then what time frame? So I think I answered that, and I apologize. I'm pretty sure I answered that when I said that, because I don't scalp. I use I use 6 time frames, right? I primarily use the 5, 15, and 30 minutes, right? So I would look at those time frames to see if it's in alignment with one another to get into a trade. And I will wait for a 5-minute close. And if I'm not seeing what I'm liking on the 5-minute close, I like to see where the 15-minute close is, and then I'll wait for a 30-minute close, right? Because that's what I like to see, because the higher time frame we have on the close on that time frame, and it's giving me a sign, like it's showing that, hey, we just closed on like 30 minutes above the 50%, and we had a hammer. You know, that to me is a very strong indicator. Okay, 30-minute time frame, we had to close above the 50%. It was a hammer, meaning that we have a shadow or tail wick on the bottom of the candle. That means that there's a strong buying presence there. For me, I will take that as a good indicator that we're probably going to at least continue for the next 5, 10, 15 minutes to the upside. So I would take a long there depending on where price is in correlation to the daily high or the next swing high, right? Because we know now that it's, at least for the next 30 minutes, the bulls are here and they want to try to take the price to, higher, to the higher price point. But again, that's kind of just a high level of it. And I believe if you were here, 30 minutes ago, I did talk about it because I think Mo or somebody was asking about, or someone was asking how you utilize the 50%, and I was going through the charts on, the 5, 15, and 30 minutes and talking about the 50% and whatnot. So I'm just going to move on to the next question. I'll circle back if you all still have the same questions. All right, Josh, good night. All right, cool, Mo, you got it. Awesome. No worries, JD. Glad to help. Okay, I don't know what love things go on between Mo and Motovic. Guys are just having some bromance going back and forth. Do I chart I chart. Hey Gio, good question. So I chart ES with extended hours on, and the reason why is because we trade futures, right? I trade futures, right? You see me tweeting out, my trades or my ideas or my targets, pretty much as soon as futures open at 6 o'clock U.S. Eastern time. So yes, I use extended hours, right? Because that's what helps us determine, the price, right? So for me, extended hours gives me the full broad range of the candle, right? Especially with the strat and how I trade, I need the whole entire candle, right? A lot of people traditionally will just use the body, right? To me, that's right now. This is liquidity, right? This is order block right here, supply, whatever you want to call it, right? Why? Because you know what? It was an impulse move here. This just got rejected. People are trapped here. The longs are trapped here. So this is a valid zone. Right? If we were just to use the body, you'd be like, okay, once price got here, you just disregard it. So to me, this is valid price action. So yes, I use extended hours. Let's see. Nope, I keep extended hours on all the time. Especially as a futures trader. Let's see. When would you enter a trade? Let me go back to you, Mo. Motovic. Yeah, I would love to do this every week, but guys and girls, like I said, I have personal obligation commitments, just like yourself. This trading is not my full-time job, as many of you probably are unaware of. I've said this multiple times. I don't make my main source of income from trading. It's a great supplemental income for me. And don't get me wrong, I'm not saying I don't make good money off trading. I'm just saying that I just don't sit here all day, even though it looks like it because I tweet out so much. But it's not like I have a 9 to 5 or 9 to 6 or 8 to 5 job. So I wish I could do this all the time. But like I said, just don't have the capacity to do it every single day or every single week. I would love to, maybe in the future, if some things shift in life and whatnot, I can switch to it. But for the current time being, that's why I pulse you all, right? I want to try to capture as many as I can out of you all to do it. Like, don't get me wrong, I've done some of this stuff in live spaces with only 3 or 4 of us because, my objective is to help many people as can, but I just can't do it on a consistent basis and whatnot. I don't know. Maybe I should run a Discord and that would change things. But but as of right now, I don't have anything besides Twitter and YouTube and whatnot. So, but again, I will take your comments into consideration going to 2024. I do not use volume profile. I do use volume though. It's just not on this chart because I didn't want to pollute it with so much things on bomb. I do use volume. I don't use a volume profile, meaning like the shelves here that you say, oh, with volume shelf here, with a gap, next volume shelf up here or down here. I've used it in the past, just not my thing. I don't need it. Could it make my trading better? Maybe. But again, right, my system's been working for me. And if you've been following me long enough, I would think that I've shown you all that I know what I'm doing. And it works for me and it works for you. And I've shown you a level of accuracy that you have not seen anywhere else before coming here. And you might start seeing somewhere else a little bit now, but before you have not seen that, right? I'm giving you guys actual direction, not only direction, but actual price targets. This is well before data plays out, right? I'll tell you 12 hours in advance where I think price is going to go, and it hits it. So I'm not going to incorporate too many things, when I don't need to. Let's see. So Rocky, I'm actually in the finance industry. I am in the financial markets. I'll just leave it at that. I'm in finance. I think it's probably the best way to say it. But other than that, I won't go further detail. Just know that I'm here for doing this with you guys. I've been training for a while now. But we'll just say that. It's a job that I'm good at, easy money, and it pays me a steady income that is, that has nice dollar signs to it, so I'm not complaining. And it allows me to not worry about every single day I got to come to the market and perform, right? If I have a shitty day, great. If I have an okay day, great. It doesn't really matter, right? It allows me to enables me to become even more emotionless into the market, which is a key thing that you all will need in my opinion. Let's just let me just look at something real quick. Let me see. Here, let's just do this. I'm gonna see if I can do this real quick. We will do this, and we will go here. I want to see what's the smallest time frame we can go to. Yes, I can go 5 minutes on this. Okay. Okay, let's see. So this was Tuesday, no, Monday, October 16th, right? We have the high and the low and the 50%, right? So you guys were asking me, like, what would be a possible entry for trade. So this was, let me see, this was start of Tuesday night and then Tuesday morning RTH, New York time. So let me see, New York time. This, I'm going to mark off the open because you all trade New York open. There's New York open. This is pretty much futures open. Let's see. The Asian market open. Where's London? London open. Okay. So this is all, everything before the blue line is going to be Monday. Everything from the blue line over is going to be Tuesday. This is the New York Open right here. Let's just change the color so that way we at least know the New York Open, right? So, and we have the fibs, right? So here's the low. Low's down here. Highs up here. That's Monday's high, Monday's low. 50% right here. All right, let me just see if I can do this real quick. So it makes it visually more easy to see without the fibs on. What's the 50%? 50% is right here somewhere. 439.45. Okay, I'm going to take off the fibs now so we can just see. Okay, 50%. So you all see this, right? High, 50%, low. Okay. Let's see. Just want to make sure. Yeah, no worries, cooties. Everybody's stuck in the rat race, but like I said, 2024 is when we all change everything for everybody, right? As long as you all stick to the rules. I will tell you that 2024 is going to be life-changing for people. All right. So here's a perfect example. This is Monday's action right here. Monday's regular trading, right? You can see the 9, let me see. Monday's action. 9:30 New York Open right here, right? Rock it up, came back down, blah, 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 close. This is the Asian market open on Tuesday or Monday, Tuesday. London and going on, or actually, I apologize. No, this is Tuesday. Sorry, Tuesday's action, and this is Wednesday's. So We have the 50% here. Going to London, Asian, we broke above the 50%. London, we came back below it. And then, pretty much leading to New York, we were failing to close above it. And before we even got to New York's regular trading session, look, we already knew that this was not going to go back up, right? This looked like it's ready. We're looking, we're broke below 50%. We got close to the daily low. So now we're looking for that daily. We're looking for a 2 down according to this strat, right? Because we couldn't break above the 50% closing. We're below it, and now right during regular trading hours, we're gonna see like price is right around the 438 point, 43.83, and we're gonna see. We obviously want to see if they want to go toward the 50%. They tried, failed, came back down. They made another push up. At this point, we know that we're no longer testing 50%. If we can't get close to this or we can't break it, this is our first sign to go down. Why? Because it's been trying since 5 a.m. You can see 5 a.m. Eastern time to try it. So for 4 hours, its price has been trying to push up. Could not get up there. We had, and they tried. They had this nice massive push. Couldn't get up there, right? So this is my first. That's already going in there. We already know that. Look, it's probably not going to be bullish today. This was that good bullish attempt, and it failed. We also have on the 5-minute here a Spain top or doji, whatever you want to call it, right? So failed 2 up because we broke the previous day candle or previous 5-minute candle, and it failed and came back down. So what does the spinning top and the doji mean, right? So this is where I combine, current modern technical analysis or old school analysis, right? The current being the strat, old school being spinning top and doji. Well, that usually means that there could be a shift in where price is going, right? That's what it usually means. Neutral candle, neutral from where though, right? We just made a massive rally up, so this neutrality means that okay, well the price movement up now could be stalling, right? So maybe we should be looking to exit our longs and potentially go for a short if we didn't go long. The other thing to note is that also this, on the 5 minutes, we're extending on the clouds, right? About 5 points on ES, nothing big, but not something small either, right? And we noticed that we couldn't get anywhere than 50%. So for me, just off the 5-minute alone, plus with the EMA cloud overextension, plus with the 50% on the daily time frame, and also the fact that we couldn't do this for the last 4 hours push up, well, that to me is probably a signal that, this might be a good trade to take the short side, right? I would have entered on next 5-minute candle based on the strat. I would have entered on the low of this current 5-minute candle. So my entry would have been right here. That would have been my entry. Entry. If I can spell it right. Entry. My stop would have been above the 50% and somewhere above this swing high, because that was going to be the swing high. I probably would have put it to this swing high. I know that might sound like it's a lot for a lot of people, right? If your entry is here and you're putting here, would have been about 10 point stop. But for me, I would have been targeting at a minimum this candle, because that's the low, the strat. That's what we do. We enter here, we target out the next channel low, and then I probably would have target this current swing low. So you guys seen that, right? At a minimum, it would have been a 1-to-1, right? I would have got 11 points out for a risk of 10, or I could have got 16 for a risk of 10. So still better than 1-to-1, right? So that's, to me, that's in that was with a high stop. Some of you may have put a stop right at the 50%, right? 5 points. So 2-to-1, or you may put it at this swing high up, which would have been right here, right? So what is that, like 8 3/4 to 11.5? But okay, that's just on the 5 minutes, right? And I just listed off a couple of things, right? Talking about overextension, the 50%, the candle, the failed 2 up, the actual traditional candle type, and then let's just go to the 15 minutes and see what that looks like, right? So the 15 minutes now, so this 15 minutes now, we can see this was just, when this 15-minute played out, this is just a big ass inverted hammer, right? So to me, this would have been one, this would may play out. This would have been confirmation to stay in this trade and take it even lower, because this is a big rejection. This means sellers are here. Sellers do not want this to go anywhere near this 50%. So that would have been the confirmation to stay in the trade, or even to get into the next trade for the 15-minute candle, right? And then if we go to the 30-minute time frame, let's just see where that's at. That's now, what's a 30-minute? Well, 30-minute became a freaking bearish engulfing, right? A 3 candle. And if we play a strat, we know what's coming next, right? 3, and then what? Either a 1, consolidation back in, or a 2. Is it really going to do a 2 up? Most likely not after that massive rejection on the 30-minute candle. And also, look, the clouds are bearish. Couldn't break above the 50%. So now looking for that 3-2. 3-2, 3-2 down. And then I could have gotten here, and then you would have been targeting, look, the daily low, because we're so close to it. That would have been your your initial target, and then anything else below that would have been cream of the crop. And then if you didn't get in here, you could have waited. This is your 3, this is your 2, and what's this on 30-minute? A 2, or this is a 1, and this is another 1. So double inside bar, and then what? We had, we came back up. They tested, they broke, they made a 2 up, but it's a failed 2 up, turned into a bearish engulfing. 3 down, another 3, and another 3-2 down, right? So that's how I look at entries, right? And on different time frames. And then if you look at 10 minutes, same thing, right? 10 minutes, our entry was here. This was a bearish engulfing. So this was failed 2 up, came back down, took it out, became bearish engulfing. 3-2 down, right? 3-2 down, right? And another 2-2 continuation. So it's just looking at different time frames, looking at how price is reacting, and looking at what it's doing according to the way I trade, right? The clouds, the fibs, the actual number of the candles, and the shape of the candles. And obviously I didn't even draw trend lines yet, right? So that is kind of just a glimpse, and that doesn't take in consideration what is the quad doing, what is the VIX doing, what is NQ doing, what's the rest of the market doing, and what are you even talking about, market structure, still making lower highs, lower lows, lower highs, lower lows, lower highs, and then lower lows, right? Bearish structure, right? So there's a lot of things. And do we need all this? No. I mean, a lot of people will say you don't need to trade all that. And I totally agree. It's really up to your personal flavor, right? And if you're a fair value gap trader, we can trade fair value gaps, right? You might not have gotten into any of this, right? You're waiting for the pullback, right? Waiting for the pullback. Waiting, didn't go, oh, pull back. Look, tapped it right here. Barely tapped it right there. And I'm going to make that bigger so you can see it. Right? You would have gotten here, and where you would have targeted, this would have been your target right here. Because that's liquidity. This is where the low is. So you would have, and that's the trick with, trading these, right? Because you're like, oh man, I would have made a 25-point move on ES, and then I would have let it retrace, back 20 points, and then eventually I would have gotten, out, I would have gotten out of this whole entire thing, pretty much a 48-point move, right? So it's really, and a lot of people can't sit through this. And a lot of people say, why would I let this thing pull back? I would take profit here. Look, there's many ways to trade. And if you were trading futures and you go heavy and you're a prop firm trader, you would never sit through this pullback. You would have got liquidated because many of you go heavy. You would be able to sit through this if you traded with the power of 1, because you are trading a size that you can handle and a size that you would not get liquidated on. But then again, look, I still would have exited somewhere here and waited for this pullback, and failure to take out, this order block here would have been another sign to go back short in here. There's a lot of ways to trade, and obviously tonight's thing is not about entries, exits. It's really just how you start charting, how you look at technicals, right? So I've shown you how to do the highs, lows, 50% on multiple time frames, right? We did a top-down analysis from the monthly, weekly to the daily. We looked at patterns on different time frames to show us what patterns are potentially going to be doing. We looked at where there's going to be liquidity zones or swing highs and swing lows. We looked at where there's going to be supply and demand imbalances, right? We looked at how to identify price targets. We look at how to use the clouds in addition to what the candles itself is doing, right? Fail 2 up, or is it going to be a bearish and bullish engulfing, or inside bar, etc., right? So And we kind of touch upon entries and exits and whatnot. Like I said, we can go on and on forever, and this could be an 8 hour YouTube stream if we wanted to, but we're not going to do that. This is just a glimpse for you all to look at it, and this is how I trade. If you've been on my live before, I've that one day we did live and we ran this thing up, I don't know, like 50 points, right? And I was telling you the targets and what I'm seeing, and I was showing like, hey, we have this combo on at this time frame. So you can see what my mind's thinking, how my mind's operating, what's moving at, right? I'm constantly looking at, analyzing, and whatnot. So let me just look at the comments real quick, and then we'll end the video. That's it. Let me see. I'm sorry, I'm just reading the comments. Trying to scroll through them. Yeah, JD, I probably will dive into NQ. In the essence that I'll probably map it out. I'm trying to change things up in 2024. I hope that I can have a little bit more time to look at it and whatnot. But I still primarily trade ES just because, like I said, it's been working for me. I've shown you guys my trades and my setups and everything. So I'm an avid believer. I don't want to, rock the boat when I don't need to, right? If I'm able to consistently make good trades and wins off what I'm doing now, there's really no reason for me to try to throw a new method into it. But let me see. Let's see. Yeah, look, everybody, I know everybody's in the rat race. That's why you all, whether you work for corporate America, corporate Europe, corporate Asia, if you work in Asia, it sucks. I can tell you that firsthand. Work very long hours, and it is expected to do the 6 days a week for freaking pretty much at least 10, 11 hours a day. Well, look, that's the reason why you're all here, right? You're all here, whether you're in the nation or other communities and whatnot, you're here to try to get out of it, right? And like I said, I think 2024 is going to be the year for everybody, as long as you are able to stick to the rules and be patient, right? Those of you that have started doing what I've been saying, you have seen changes, right? As long as you're not impatient with the process and realistic with it, you will see what you want, right? If you're coming to Monday and you're expecting to make, $40,000, well, I can tell you right now, you're not making $40,000 off of 1,000. You might make $40,000 off of $40,000, but if you got that kind of capital, great. If you don't, you got to put things in perspective, right? If you're only 150 centimeters, most likely you're not going to be dunking on a rim, right? Not that you can't do it, like everything you can. There's people that have done it, but be realistic, right? You might be able to make a layup, but that's what I'm saying. You just got to be patient with it, and you got to be realistic with what you can achieve in the time that you have. I think I said this before. If you are able to make, even if you're able to make $5,000 in year one, that's great. Many of you are probably not even there. I'm not saying that to bash on you. I'm just putting things in perspective. I want you to see where you're at and where you can go in the future, right? I know $5,000, it's not very enticing, right? None of you are in here to make $5,000, right? Because you're probably in so much debt because you lost in trading. You're waiting to make more money, and you want to recover that. Or two, it's just $5,000 is great and all, but real life comes in. You have family, you have kids, you have bills, you have debt, whatever, and you need a lot more than that. And everybody wants to have an easier life and whatnot, and you want more money than that. You want it quicker, but you got to be patient, right? 5,000 this year. Let's say you double that in year 2, 10,000. You double that in year 3, 20,000. Year 4, you double that, 40,000. Year 5, you're at double that, 80,000. Year 6, double that, 160,000. Right? Every single year you double it. Why would you double? Why we say double? Well, it's because every single year that you've been trading consistently, you will get that much more confident in your trading, and you may double your size and your position. Year 1, maybe you just take one contract, one futures, every single trade. Year 2, you take 2. Year 3, 3, 4, 4, 5, 5, 6, 6, etc. Right? To the nth power. It all adds up. It really does. And the longer you do it, the more you have confidence in your trades, right? Because like you know that, hey, I sat through this trade before. I know what it's doing. The market will react the same way it usually does, and you sit through those trades, and you let your trades come to fruition, and you just see them, the consistently compound. That's really what it is, right? So I just say be patient with it. And like I said, those of you that have really taken the Power of One challenge, that when I issued it in December of 22, you have seen the effects of it in 23. And those of you that have not done it yet and are willing to do it in 24, you will see what happens at the end of 24. A lot of you are young. A lot of you are only in your 20s, maybe early 30s. There's not many of us in the 50s, 60s, and 70 age range. And even if we are, you got time. If you are in your 20s and 30s, you got a lot of time, right? Spend 10 years, right? If you can double your winnings for the next 10 years, right? Even you start at $5,000, right? By the end of 10 years, you'll be over near $500,000 a year. That's probably more money than any of you have seen so far, right? So, just be patient with it. Let me just read what else you guys got. See, yeah, no, that's it. Look, guys and girls, I don't have any more. I mean, if you have questions, let me know. I'm here to answer your questions. Again, thank you for those that have joined, those that were able to make it for the 2 hours. I'm not here sitting for 2 or 3 hours to talk about anything besides the market, right? I'm gonna get right into it, right? I don't want to waste your time and spout some weird bullshit just for the sake of spouting it. So, that's it. If you have questions, ask now. If not, enjoy the rest of your Saturday night. It's 9 p.m. here in the city. Still early. Things are just starting to open up. Yep, 996. You're exactly right. Cooties, you know exactly how it is. Yeah, and look, if you're new, I probably will post up. I'll probably say that I will leave this video up. I'll do my usual. I ask for the community to commit, meaning that smashing the like is show me your commitment, right? Other people ask you to show commitment by paying for a Discord and whatnot, which I have no problem against. But my way for you guys right now to show commitments is to engage with the post, because what that does is that will push the post forward for other people like yourselves, right? You found me randomly, and I would like to say that I think I've been a positive influence on your trading journey, whether it's been consistent or not, or mental or not. But again, you guys and girls pushing that like, even on this video, right? Hit that like, smash that like on this video. You don't lose anything, right? In fact, every single time I do this, I'm giving you guys free, info, right? Taking time out of my schedule. So hopefully we can, touch more people looking for help, or looking for somebody that's willing to help, right? And answer questions. Because like I said, what I'm doing now, you're not going to find, very often. And in fact, that, some people I follow, even, I've seen some things like, I'm only free on certain things. If you want, deeper thoughts, you got to pay for it. Again, nothing wrong with that. I'm a true believer that, people should be paid for their time and their efforts, right? You don't go to, your car dealership or your doctors and expect them to do it for free. You're paying for their time. You're paying for their experience, your expertise, right? But anyway, another subject for another day. Nonetheless, as always, you beautiful people, I am always thankful for your engagement, and I will take constructive criticisms, right? I'm not always right, not always the best, so if you got something that you disagree with, let me know. And if you think you have something that can help me out, improve upon, let me know. That's the whole point of this community, right? We're here to build a solid machine that we can utilize for everybody, and that we can win together. Because the goal here is, I'm hoping that in 5, 10, 15 years from now, once we're done this, I can just come back and just see everybody in a different limelight. Of course, you're not going to know who I am, but I'm just going to be happy that I am able to hear your stories and just see life changes for the better, obviously. And whatever you do with that money and success is up to you. I will not guide you on that. That is your decision alone, but hopefully you make great decisions for that. But anyway, I'm gonna go get some more whiskey and enjoy my evening. And you all enjoy your evening, and we'll most likely talk tomorrow, right? Futures open up tomorrow. I will say that I do expect I expect a movement this week after a week of consolidation, pretty much. I expect a movement, especially as this will be the last week of November, and then Friday will be the first day of December. Definitely expect a good movement, and I do think we will take out, if we go back to the charts before everybody adjourns. Like I said, I still think we take out. Oh man, I think I took out my. Oh, no wonder I'm on ES. Got nervous. I was like, oh man, all the stuff we took out. I still think we take out these highs, right? I think we take out these swing highs, 459 and 462 before we make the downtrend. And here, let me show you one last secret. There's only 16 of you. Those who left early won't get this, but anyway, no, I'm fucking around. They left. They'll get this in some shape or form. Here's another thing I want to show you, right? So I'm on the 3-month chart, right? You can see this right here, 3M. Not the tape company, but 3M, 3 months. Do you see? Somebody type out on the chat. What do you see? If you trade the way I've been teaching you, what do you see? Tell me what candle you see, what kind of shape it is. Tell me what you see. I want somebody to type it out in the chat. What do you see? This is a test to your knowledge. Even tonight, if you've been following along, you should understand what I'm seeing. Somebody type out this, and then the rest of you will get the benefit of whoever types it out, because then you see. I'm gonna leave it up here. I'll just sit here and drink until somebody types out what they see on the quarterly. That's right, the quarterly. None of you ever even look at the quarterly. Just enjoy my beverage. Waiting for somebody to type out what they see on this chart. So tighty whiteys or tight tendies. Sorry, my bad. Tight tendies. Yes, it is a fail 2 down. That's right. It's a fail 2 down so far. It's not a 2 up. It's a fail 2 down. But what else do we see? Where did it fail? What did it do? Right? Based on the way I trade. What do you see? Right? This is just education. It rejected off the downsides, right? But where did it reject? Somebody said they want a course. This is literally what a course is going to be. This is going to be homework. I'll be like, here's the chart. Tell me what you see. Come when we go to the next class, right? And then we break it down. We talk about it. This literally will be a course. The reason I know is because I've been in several before where I've instructed and co-hosted. So what else do we see, right? Come on, guys and girls. Like if we trade the strat, we trade the email clouds. If we trade highs and lows, what do we see? Rejection to the downside. That's right, Motivic. Rejection off the clouds, right? So this is the quarterly, right? So how many months are in a quarter? Somebody type that out. How many months are there in a quarter, right? Or you go back to elementary school. I know we can count up to 12. So tell me how many? What's the number of months in quarterly? Somebody type it out. Yep, good stuff so far. But how many months are in the quarter, guys? 3. That's right. So what month are we in now? And you're right, it did close above the 50%. That's right. So what month are we in right now? I'll show you a little trick. Nobody else is going to teach you this. Anybody know what month? I mean, I looked last time I looked at the calendar. I saw the month. You guys know what month are we in? Are we in September? Are we in October? Are we in December? Are we in January? What month are we currently in as of today? This is gonna be critical if you understand what I'm going to. So somebody type in as of today, Saturday, 9 p.m. or 9:07 p.m. What month are we in? You have 12 months to pick from. What month are we in? Somebody type it out. Thank you, Bill. Thank you, Ken. 11 November. So if we're on a quarterly, so does that how many months do we have left then for the quarter to end? Not hard, right? If there's 3 months, 3 months. That's right, Gio. Yeah, that's right. We got it. We got it. Go team. So we're in month 11. And we said this quarter. So how many? Then we said you all said there's 3 months in a quarter. So we're what? We're pretty much have what? Yeah, that's right. Thanks, Motivate. I'm gonna get you all involved. We have 1 month left. And what did I say? What did I say when we retrace 50% on a candle and we have time left? What did I say? Remember this? This is the hidden rule. That's right. Keep going. Think. I know somebody knows it. This will be my last thing, and then we're logging off. I'll literally give you a minute to figure this out. If not, I'll just end the live stream and you'll just have to wait. Somebody think. What did I say? If we have enough time and we retrace 50% of the previous candle, what do we do? I'm still waiting. I'm just chilling. I'm hoping somebody picked up on that. All right, type a 0 if you have no clue. And I'll just, all right, if everybody doesn't know, I'll just give it to you. Think. Just think. Thank you. Oh, there we go. Yes. Look at that. I'm clapping for you. Good job. That's right. We have a high chance. If you look at so why? Look at this. So we broke above 50%. You can see that. 50% right here. Bad boy. Yeah, look at that bad boy. 440.87. Failed to down. Hammer. We have 1 full month of trading left to take out the high. Where's the high? 459.44. Where's price at? 455.3. So you all should know this. We have 4 weeks of trading to make a 4-point move. Do we do it? Right? You tell me. Look at the candle itself. So on a quarterly basis, that means that we can make an outside quarter, making a 3. And then we lead into next 3 months, next quarter, January, February, March. If we stay above a certain range, we can make a 3-2 up quarter. And if we have a strong quarter, we can make a attempt at all-time highs, right? That would be our target, right? 3-2-2 on a quarterly basis, right? So for swing potential, take out this swing high, and the subsequent quarter maybe pull back and test this previous high. So that is why I said to you all before that on a daily time frame, on the next couple of trading days, I expect these swing highs to be taken out. Right? That's where liquidity is at. That's where our strats get to take us. We retrace 50%. So hopefully you all are starting to see this now. Again, the 14 or so of you that stayed on this stream, congratulations. You got the benefit of this, right? So again, right, this is more high level than we were supposed to go in this video because this is getting more technical, strategic, and how we analyze and how we utilize certain strategies that we trade and whatnot. But because we're so close on a bigger time frame to a higher time frame imbalance, a swing high liquidity, whatever you want to call this, we are very, very high probability of taking this out. That's how it works. That's how it works, folks. That's how I was able to call that low all the way back when we were here, right? You know, I think when people were saying like right around, I don't know, like it was way back when. I think it was the middle of summer. You know, somewhere around here, summer. I can't remember where people were saying like we hit the lows at like 4:30, and then we ended up going to 4:09. Same concept, same thing. But anyway, look, boys and girls, it is 9:15, and it is late for many of you, early for some of you, and the rest of the world's passed out. Enjoy your Saturday night. I hope that you learned something tonight. I hope something clicked with you. I hope something was just what's the best word for it? I just hope that whatever came about this almost actually it was 2 hour session. Shit, man, it's 2 hour live stream, technical live stream. That it was able to help answer some questions. Obviously, it never answers all the questions. Never does. Never will. That's why we continue to do this. But nonetheless, I hope that whatever we did tonight has given you something that you were looking for, and that can be beneficial to you. So again, thank you again to you beautiful people. I look forward to talking tomorrow, and I look forward to us crushing it on Monday. Enjoy your night, enjoy your day, enjoy your evening, enjoy your afternoon, enjoy whatever you have going on. And again, we will talk again. Thank you very much, and do me a favor, smash that like on this video. It helps me out, it helps you out, it helps everybody out. Because again, you pay me nothing. I'm paying you to sit here and chat with you all beautiful people. So enjoy. Thank you. Goodbye.